So now that we have moved down to the 15-minute charts, let's just look at this wave structure which is under progression. And before moving any further, we can clearly see that this is our point of reference, and we will start the wave count from here on. So one thing that I would like to make clear here is that we are having a lot of gaps here, and this is making it difficult for us to analyze the chart. So I will be making a bit of assumptions, and if in further progression when we have more data on the chart and we look and we find that one of these counts is not fitting in, then we can modify that wave count. That is, here we have to make assumptions. That is one thing I'm trying to make clear, because we are not having a clear-cut data. So this looks like the first wave is completed till here. Then the second wave, it looks like has completed till here. Then it looks like we have 1, 2, 3, 4 and 5 completing the third wave. Then so it looks like the fourth wave completing over here. Then it again looks like 1, 2, 3 or 4 and the fifth wave completing over till here. Once again, I am just working out on assumptions. It's not very clear over here. And let's just have a look at a bit of the Fibonacci ratios, so we can verify that if this fits in with the wave principles or not. So wave 1 completing till here, so we will project it from the start of wave 3, and wave 3 definitely is completing above 1 and below 1.618, so it is in proportion, and it is not it is not the smallest wave. Wave 3 is never the smallest, remember, and that is what we were trying to check out here. And other than that, wave 4 has not entered the price territory of wave 1, and so all the rules are being followed, and hence this wave count is a valid wave count. And based on this wave count, we would like to assume that the fifth wave has completed till here, and based on that we can label this the 1. So now that we know that the first wave is completed till here, we will look to buy the pullback or the low of wave 2, which would be somewhere here. Now one thing that we know is that Fibonacci ratios can be used to determine a rough idea of where the wave 2 can complete. So we will simply draw from the starting point of wave 1 till the ending point of wave 1, and we will look at the major ratios. The major ratios come around 0.23, 0.382, 0.5 and 0.618. And how we will use these ratios is that we will simply mark these levels. Let me mark them right away using the arrow tool. So we will mark these numbers. This is the first one, 0.236. Then we have the 0.38. Then we have the 50% level, and the last one, 0.618 level, that we will look at. So now let's just remove the Fibonacci tool, and what we are going to do in the chart further is that we will look for price to retrace at least till 0.236. So if someone is of the belief that wave 1 is completed till here, as I already specified that the data has many gaps, and hence we have to make a bit of assumptions. So we have made a wave count, and in that wave 1 is completed till here. So if someone wants to go short for the second wave, then they can place a bit of a stop loss a bit above this level, and then look to go short till at least till the level of 0.236 retracement level, which would be this level of 2080, target 1. And if the shorts carry on, then they can go till this level of 2065 as target 2, and further if it goes even to the 50% level, then we have the target as 2050 as target 3. The last one is the 0.618 level, obviously, and in case it falls a bit too sharply, then it will go till there. But right now what I am saying is that if you are to trade this market based on this 15-minute chart and you are willing to take shorts, then you can take this trading decision. And one thing I like to again point out is that this is not a recommendation or anything. I am just analyzing the market and giving you my perspective for educational purpose here. I'm not putting out an advice to go on short this market actually. So that is all for this analysis of the 15-minute chart, and you saw how we went from monthly chart to the weekly to the 1 hour chart and down to the 15-minute. We can go even lower like the 5-minute chart, but since the data is not clear in this 15-minute chart, we are having so many gaps. So if we go in the 5-minute chart, we will, since again will not be able to interpret much. However, in contracts in which you don't have that much of assumptions to make, like there are not that much gaps, we can simply go down to the 5-minute charts and even to the 1-minute chart, and there is again nothing special over there. So if you are to go to the lower time frame from this chart onward, then we have established that wave 1 has completed till here, or we have assumed because the data was not clear. So this would be our point of reference, and taking this point as the point of reference, you can go to the 5-minute chart or the 1-minute chart and do your analysis over there. So if you want to trade the 5-minute or 1-minute chart, then you will go to the, say, the 5-minute chart and look for 3 waves down, because as we already know that after first wave comes second wave, and second wave consists of 3 waves or a combination of 3 waves. So you will look actually for A, B and C, something like this, or a variation of this. Now once again, if I were to repeat, then it could be either a zigzag or a flat basically, and a zigzag looks something like this and a flat looks something like this. So it could be either of these, and in the case of a zigzag, it was 5 waves, 3 waves and then 5 waves, and in the case of a flat, it was 3 waves, 3 waves and then 5 waves. So you can go to an even lower time frame like 5 minutes from here and look to count from there on, but I would not recommend that right away, because right now if you are actually just learning of these lectures, then definitely you need to practice a lot more, and I would recommend using time frames like hourly and monthly a lot, because there you have much more data and clearer perspective of what's happening, rather than making a lot of assumptions. After you have mastered your skills on these charts, and then you can look to go for lower time frames and doing your analysis over there. And one thing interesting about this 1 hour chart is that you can simply place your swing trades using it, because monthly is generally for investors, but using hourly charts you can definitely make swing trades, and that way you can actually practice what you have learned. And in the next session, I will show you how to make predictions of future movements using this Elliott Wave principles, and we will again use this chart of S&P 500, and we will see how we can figure future price targets and trading strategies associated with them.